Welcome to Trading Lounge and the daily US stocks for Tuesday, February the 8th. And starting with Amazon on the daily chart here. It's a little bit complicated, but in a nutshell, we're looking for wave 1 to the upside and then back for wave 2. So we've got a little wave, we're looking for 5 waves within this wave 1. So let's just go in and have a bit of a look at that because we're not quite there just yet. The setup that we really want across all markets is really this wave 2, not quite all, but most. So we just need to be a little bit patient to nail that correct entry down. So with Amazon here, we've got wave 1 and 2 here, and then I was just counting this up here, a bit of a guessing game, but 1 and 2 here, and 3 and 4, and then 1, 2, 3, 4, 5. So the dust has settled and it's starting to unfold quite neatly at this point. Now, a couple of things here. First of all, if that is wave 3 here, then wave 4 is the 38.2% retracement level, so it could pull down to this level. I'm still looking for wave 3, 4 and 5 as wave 1, and then we'll have the ABC back for wave 2. So that's what we're looking at here. Now, if I've made a mistake, then I revert back to the trading levels, and we've got this major trading level here, 3, and then we've got minor group 1 above here, so 1, 2 and 3, 100 in this case, they're minor levels. So I know that if we get a tested support on top of 300 here, then the market will be pulled to the 500 and it leaves this number here. That's the beauty of the number 3. So the question, what is tested support? Well, the normal pattern is the arrival, the reaction, the first high above the level. We don't chase that, and then we let it fold back as some sort of ABC corrective pattern, and then essentially taking out any highs at that particular point. So we just sort of look at the second high and we use this particular image here. So if this is the 3,300 across here, it's quite a process to go from the arrival, reaction, first high above the level, the correction, and then another entry over here. We can go on these entries, of course. This will also be a little classic trading levels pattern in here if you want to drill into it, the arrival, the reaction, the first high above the level, the ABC, and get a better entry in here. Sometimes it's clear, sometimes it's not. We always start from the top and then we work down that way rather than the bottom up, because we want the market to prove to us that it's actually strong, and to do that it needs to take out a high based on the closest largest number, which is the 300. So that's the process that we use. So if I'm wrong, that's where we'll be at this point. In terms of going long, if you're everybody trades differently. If you're a trend trader, well then the idea really is to build in above the 3,000, to build in a position here, one on the 100 excuse me, one on the 200, and then if we get the 300 we move in on that, and then we add on the 5, and that way you can manage your risk, your exposure a little bit better. But some folks just trade intraday or for a day or two, so everybody's differently and everybody's got different amounts of money and so on, so it's a little bit tricky, but the trend is up, and we just need to understand those patterns as we move higher. Alrighty, so for Google here, kind of fitting everything into the same pattern as such. So in this case, we're on 100 ticks here to start, so we can look at this as wave 1 and 2 here, and all of this is 3 and back for 4 here, and then moving up for 5 here. And the wave 4's moved back a tad too much, but it's sitting on the number 8 here, so you can see that the 8 really plays a strong part here. It's the third strongest number, 1, 5 and then 8, so it's okay sitting at this particular point. And the other thing I like about this too, because then this would be the arrival, this would be the reaction, this would be the first high above the level, and this would be the ABC correction here, and then we would move up there, and we can move in over here, we can move back over here, and all these sorts of things. Can this be counted differently? Sure, you could probably put wave 1 here, but then this stock would be one of the stocks that is leading to the upside. So I kind of want to put this particular pattern is the same as Apple. If we go in here and just have a look at this on the 5-tick chart, because it looks impulsive to the downside, but I didn't really see it like that. But I mean, it looks like 5 waves, but I've got it as an A wave here, a B wave here, then wave 1 and 2 here, and 3 and 4 and 5 for the C wave. So I think that is the low here, and we'll just continue to move up through that way. How do you go long through all of this? I don't know, maybe through here. Less is more. I mean, it's pretty deep correction, so it should be sort of okay anyway. This move up through here will be 5 waves, so just, you know, be mindful of that. It probably won't go much further than it should take out the top of wave 3, but this is where group 1 comes in. So 1, 2 and 3 here, and when a market pushes up into group 1 here, then it's these levels here that basically act as resistance and sort of pin it back to the closest largest number, and at the same time the group 2 below 65, 72 and 80 that supports the market. So when we come back for wave 2, that will be the support there, and that's what it's developing here at the moment. So really, when we're talking about a large number like 3,000, it could be $3. So, you know, then we just look at group 1 above and group 2 below, and that's the natural swing range for a market. Now, if the top here, the 300, becomes a tested support, then it's leaving the closest largest number. If this down here becomes the resistance, then it's leaving this number and going lower at that point. Now, the trick is not to lose money while you're in this swing range here. So after a while, you need to prove things to yourself, and you need to notice these things and build, you know, confidence on these things. So yeah, anyway, that's that. Let's cruise on to Apple here. So Apple, as you may know, has been a little bit of a template for me in terms of the move up through here, because all this sort of scuffling down the bottom here when the Feds were shooting the breeze, it's on the S&P and on the NASI, and on a lot of stocks, it's quite messy down here. But Apple had quite a nice pattern here, which really matched up to the cash market S&P pattern as well. So that was really quite sort of helpful. So this little pattern down here was really the same as the S&P on the cash market, not the futures for the E-minis and so on. That was like completely different, but it's quite helpful when you look around the block and look at other markets, and you know, it might be the, you know, if you're looking at the S&P 500, you can have a look at the S&P 400 and these or other markets, even though you don't trade them, because sometimes you just see a little pattern or something that's familiar and you recognize it, and that can be helpful. Anyway, in a nutshell here, we're looking at wave 1 and 2 here, and we've got wave 3 up here. So let's just expand that up a little bit. Take it up a little bit more, a few things to talk about here. So we've got wave 3, wave 4 here. So with Amazon, we're also going through wave 4, and also Google as well. So we're keeping it in the wave 4 basket. Now, it's possible that I could look at this here as an A wave here, a B wave here, and a C wave on this move here, and have wave 4 done and dusted here, and then have 1, 2, 3, 4, 5 here, and then have an ABC. So we could look at that as wave 1 here and come back for wave 2 here. So that's possible. However, we'll take that trade, take that top out, because if that's true, then that's going to take that top out there, okay? Otherwise, we're going to be looking at wave 4 over here, and this line, I think, is probably the 38.2% retracement level. So I think, yeah, Ross, I remember now. So yeah, we can put this here, because this was a little bit lower than that, and it does have a nice little 5-wave structure there. So as an A wave, a B wave, and a C wave here, for the B wave, that would also make sense as well. That means that we need to get some sort of C wave out of this that can pull back to the 169, 170 sort of area here. And obviously the 70s, you know, the 170 is going to be a strong number here. in the bigger picture here, we're actually in minor group 2. So when we talk about 180 here, we talk about 65 and 72, and that's where we are at the moment. And this is, I always call the 72 the sort of the backbone of group 2 in that sense. So basically, whatever happens, I will remain bullish while the 65, 165 stays as the support within this market. But normally once the market gets within group 2, 65, 72 and 80, it normally stays there and starts to climb higher, and we start looking at 200 at that point. But either way, we still need to get this wave 4 happening. We still need wave 5, so we can trade that up. That's not a problem. And then the wave 2 here. So in the bigger picture, it's this wave 2 with all markets that we're really looking for. That will be this will be the trade going up into wave 3. So try not to lose money in wave 4, because that's what monies do. You make money in wave 3 and you give it back in wave 4. The same with 1 and 2, of course. Same with all trends and corrections, and that's all the markets are, trends and corrections of different degrees. And you know, it's not really a matter of, you know, if you trade on a tick chart like this, or a daily chart, or a 5-minute chart, or a 15-minute chart. It's not really about that when you're using Elliott. It's about the degree of structure that you're trading. So if you're trading sort of green waves or blue waves, in another degree higher, because you know they're all different sizes, and that's what you should be focused on. Alrighty, let's move along. So Facebook. So I just thought, I had a structure down here that we could have had a low in place, but it made another little low. So now I need to open that Pandora's box and look at all the possibilities that we've got for this market. So from this low down here, if we do count it as 5 waves up here, then the 61.8% is around just above the 200 area through here. So also the 200 is quite a nice support here. I'm in Australia, and Facebook has just lost a court case which will open a can of worms, and that's got to do with Cambridge Analytics. If you remember that story, how political leaders used that company to sort of put out advertising and tracking people. So they lost their case in Australia, and that will open cases all around the world now for Facebook, Meta, whatever. So I guess there's still a bit more to resolve in this. And the other thing here too is that, you know, with a trend, there's a beginning, a middle, and an end. And if we look at this here, we would have to say that that big move down is really the middle of something. So we could look at this as building, you know, the beginning of the trend, and this being the middle of the trend. So we could come down further, and if that's the case, but I'll just see what the structure looks like once it comes down into the 200 area through here. Now it's going to get fairly bouncy as it comes into the 200. So because above the 200 this is a major level, and then you got medium level and then a major level. So the medium level is always halfway between two major levels, but then we've got the minor levels, and then sub levels, and then micro levels. So it's also fractal. But 200, 210, 220 and 230, they're the minor levels of minor group 1 of 200, and that's where we'll see the ball dropping and bouncing across those levels. So obviously there is a lot of support here, so we'll just see how it goes. This is a weekly chart here. So on the daily chart, I was thinking of it something like this here. So we've got from this point here, I was thinking wave 1 and 2 and 1 and 2, and then the third wave coming down here. I'll have to take you to the tick chart, but we still got to resolve more. Even in this, if we look at this here as 1 and 2 and 1 and 2, well, all of this here still needs to unwind over here in that case. So that's the daily chart. I'll normally just go straight to the tick chart, so that's what I'll do. And we'll need a bit more data for all of that, so just to give you a bit more of an idea. So from B there, 1 and 2 and 1 and 2, and then we've got a little 1 and 2 in here, and 3, 4, 5 for the third, fourth and fifth here. So yeah, I mean, and I'm being sort of generous in labeling it like that as well, but it's possible to have a low in here as well. But look, the bottom line is that we wouldn't trade this market unless we see a really good pattern over this side, and we would probably use the 250 to trade on to go up. So if it's going to recover quite quickly and jump in, then we want to have some something to get our teeth into. We want something that's substantial. We just don't want to buy on the low. But it does appear that there's 5 waves in this little low here, so we should see some sort of rally. Now it could go to the 61.8%, or it could go up to the wave 4 of 1 lesser degree and then make a move down. So just be a little bit mindful of that. So we could have pinned this as a low, but it's not quite the case now for this. We've got 1 and 2 in here. We could look at this as 3 and 4 and 5. So we've kind of got this extra structure in now. And if I include this over here, then, which I think is somehow right, because we've got this extra move here, so it must be part of something else. So I think there's more to go here for this company. Alrighty, moving on a little bit to Microsoft. So really it's pretty much the same pattern as the other markets. Let's go to the intraday and have a look at this. 100 ticks. Let's get in some more data. How much do we need? That's enough. Okay, so maybe I could count Google the way it is, because this market here seems to be have wave 1 in it. Now obviously in this market here, I know a lot of Elliottians will sort of bag me for this, but this particular spike here, I'm kind of just ignoring most of it. I like to follow the main traffic, and that means the volume and the price. And I mean, we're bobbing along. We could look at this however, and we were moving along here. We pulled back, and then all of this happened here. But if you sort of ignore that, and because we've got 5 waves in here, so this pullback would have taken us up here anyway. And once the dust settled, it pulled back for wave 4 and 5. So if you just ignore that, then we've got 1, 2, 3, 4, 5. Now, is that the right thing to do, to ignore that? Because people had been stopped out and people made money and all the rest of it, but I just put all that aside, because I think that I'm not that keen. I'm not that, one news event or one large trade to me doesn't really set the wave count like that. So yeah, anyway, it's all debatable, but I made my bed and I lay in it, and live and die in your lane, and so on. So but yeah, I think it counts quite nicely as wave 1 here, with wave 2 and 1, 2, 3, 4, 5 for the third wave, an A and a B and a C for the fourth. And then quite clearly here, we've been counting this up here as 5 waves. So really we've got 5 waves as wave 1 here. We can look at this as the A wave, the B wave and the C wave coming down here. So a little bit more. And once again, when we talk about the sort of classic trading level pattern type of things, we start from the top, and then we can come down and we can go on to this one here, and then this one here will come down further. So hopefully, so we're doing all the right things, otherwise you get trapped, So hopefully we, look, if I'm wrong and the market goes up, well then we're triggered in long, simple as that. Otherwise we'll come down. We may not come down we may not come all the way down here. We may just come down something like this here, and then move off from that point. So we'll have a look at that over the next session. Looks like 1, 2, 3, 4, 5 for 1 and 2 here, then 1, 2, 3, 4. So I think that could be, we don't really have a nice clear 5 waves up there. 1, 2, 3, 4. Oh, we could be 1 and 2 and 3 and 4 and 5, and then the A, the B and the C, and finished here. We could just go straight up from there. So, but anyway, we'll take out the top. What we can do here though is we could just, what I normally do is just, I normally eyeball things, but if I look at that there, we know that the 50-60% retracement level is just in there, so we could put that there. I'm just doing this as an exercise. And then when we find that, then we gravitate over to the closest largest number. So we know that we've got 10 here, so that's the first minor level above the 300. So I'll just put that in there as a dash line. And then from 300 to 10 here, we've just got the Fibonacci numbers. So we've got 1, 2, and 3 here. Get that roughly right. Then we've got 5. And then we've got 8. So when we're using the trading levels, it's that simple. It's just 1, 2, 3, 5, and 8. And it's just different degrees of that. Could be micro sub-levels, minor levels. When we talk about 8, we talk about group 2. So we talk about, in this case, 306.50, the 65 number as I call it. And then the 72 in here, which will be the that number there, the 72. In this case, it's 307.20. So a bit of an odd sort of thing, but you can see how it really pinned that down there. So yeah, I mean, it's like everything in life. You got, somebody can show you something, and sometimes you see it straight away, and sometimes sometimes it takes a little while for the pennies to drop, and you connect with different parts of it, and so on and so on. So I just say with the trading levels, if just takes a while for the pennies to drop, that's all. So look, we know here now that, look, if this market I'm just saying, if the market just took off here because I got it wrong and we got our ABC in here or something, then really we need to be above this level here, don't we? So we could go, if we got a classic trading levels pattern on 305, it would have to be nice and solid though, and you don't trade the first high above the level or anything. But secondly, if it got into group 2, so if it got support on 306.50, it crept in there, you could get a small position there and then add on the 72 and then add on the 80. That's what I do. And then I would add on top of the 310, the bigger number here. So I'd build it in, and that way I manage my risk as it builds through there. My exposure. So yes, it looks a little bit impulsive here. Yes, we do have 3 waves here. Can it go straight up from here? Yes, but otherwise we'd expect some sort of little ABC pattern, just nip out that low there and then work up. And if it does that down this way, then you use the group 1 here. So with 300 here, you've got 1, 2, and 3, because if it's traded below here and comes back up and finds support on number 3, then 303, then you can move in from that level and then add on 5 and then add on 8 and then add on 10 and build in that way. Alrighty, let's move along. So Tesla. So with Tesla here, there's 2 things we can look at. If I label it a WXY, then we finish at this point and we can look at this as wave 1 and back for wave 2. Okay, if we look at it as an A wave and a B wave, and we're coming down for a C wave, well then we'll still need 5 waves, because we've only got 3 waves here. We've got this one, which is 5 waves, and then this move here is 1, 2, 3, 4, 5 here. So it's basically an A and a B and a C wave here. So it's still possible this can be wave 1 and 2 and 3 and 4 here, and then come down for 5. So really what we need to do is we need to take out these tops here to prove that it's not this wave 4. Okay, so that's just sitting there lingering away, and we just need to be aware of it. Will it occur? I don't know. Let's just get a bit more data in here. This is 100 ticks. So I'm looking at this as 1 and 2 and 3 and 4 and 5 as wave 1, an A and a B and a C for wave 2, then wave 1 and 2, and then wave 1 and 2 here. Now, if that's the case, we can go long on top of group 1 of 900. So 900 is the medium level because it's halfway between 2 major levels. And then the swing range for the 900, of course, is group 1 above and group 2 below. So that's the swing range. So the idea is not to lose money within that space. It's okay to take positions, buying lows and doing all sorts of things, but as long as you know that you just got to sort of chill out and wait, because is that support? No. Is that support? No. So we're looking for a little classic trading levels pattern here. If it took out that top, then that would be support. So the other point here too is that I've got wave 1 over here and then wave 2 here. So we could also look at this here as wave 1 here, 2 here, 3 here, and then an A and a B and a C here, and then for 4, and then up for 5 for 1, and that would bring us back into the lower end of group 2 here for that. So we need to be a little bit mindful of that. So if you're not in this already, then the trade is to take that top out there. If you want to get in a bit earlier, the 930 is it. If it does come down here lower, then we'll look at this tomorrow, and because we're kind of expecting I can see that some of the markets want to push straight up and some of them kind of need to come down a little bit further, so we'll see. But anyway, the long trade at this stage is 930 with a classic trading levels pattern here, the arrival, the reaction, the first high above the level, and ABC, and you could probably go long on the next one, and so on and so on, and then look to add on top of the 50 there as well. So I'll put that in there. The same thing, another classic trading levels pattern there. Sometimes it's a beautiful picture, sometimes it's not, sometimes it's ugly, but you just got to, like it might be here for example. If I was going to go long in here and I can see that the market had traded below the level and it tried to get up above the level here. Now I may have made a mistake in here and so on and so on, but then when it sort of clearly takes the top out here or this one here, well, then that's when I'd be long at this point, because I've got that nice support at that point. So even if you get it wrong, you know, it might take you 2 or 3 times to get in, but if it's just an initial small position, then that kind of loss being so small is not a big deal. But we tend to overtrade because we kind of want to get a buzz from it, you know. It's sort of the price is a drug, really. Like inflation's a disease. Or is it? We all like our house prices to go up, don't we? We just don't like buying things that are too expensive. And plus the government make a lot of money out of inflation in different ways. They love it. So let's move on. So we're looking at Square. So with Square here, I was looking at the A, the B and the C wave here for wave 4, and then coming down for wave 5. So I counted down 1, 2, 3, 4, 5 for 1 and 2. Wave 3 is a little bit small, but then wave 5 was a bit shorter, and I've accounted for everything here. But I'm not really, it's not showing me the love here on this one. So I thought we could look at this as 1, 2, 3, 4, 5 here. The ABC pulling back here. It looks, I mean, you can look at it as an A and a B and a C because we've got overlaps here, but you know, it's kind of got that 5-wave look about it. So let's just see, you know, if we get a classic trading levels pattern on the 110 as we talked about yesterday, then we can move in. You know, we talked about it here, you know, so we still need that. We still need this little pattern here before we can move in, and buying on lows is very dangerous. It's obviously the money's in the turn, but if we get a very small position here, we'll just, if the rest of the market's going to push up, who knows, it might push up, so I'll just keep that light there, and then we'll look to do the same thing on top of 120 and then on top of 130. If we get support on 130, then we're definitely leaving this number, but you need to understand that all of this 130 here, while this is not support up here, it still belongs to this number here. Once it gets support on top of that, then it severs the pull from this here. Folks, just, you can see it in the market depth. Once you get a tested support here, folks are thinking of this number and not this number. It's just the way it works, and you can see it unfold in the market depth. Okay, so yeah, looking a little bit sort of bearish here, so we may need to open this up a little bit further. We'll just see how it goes. We'll have a quick look at the banks. So get this chart in here. So this is Bank of America here. We're looking at a couple of trades in here, just small positions, and yeah, it's going all right. It's kind of yeah, anyway, it should just push higher. We had good volume on the previous day, kind of got that smaller range bar there, which will be corrective, It's at that level. It's at 48, so it's going to spend some time there. And you can see how 8 is important over here, and so it's going to struggle a lot here, but we want to see if it gets support on the 50. That's what we're looking for, and we can look at this as 1 and 2 here, and probably 1 and 2 and 3 and 4. Let's just have a look at Morgan's while we're here. Okay, we talked about something about in here. I think we're on the 15-minute chart, so let's just go into the 15-minute chart and just check on that, because in a nutshell we're just looking at support here. So we can see that it was resistance here, and then it sort of popped its head up, cleared a bit of the supply out and a bit more and so on. So now we're looking, that was just a drawing thing, nothing else. So we're obviously looking to go long above there, so that hasn't been triggered. But you know, when we talk about the 150 here, which is the medium level, we're doing all the right things here, because the market is, you know, snaked across here and is finding itself as support. So being on the right side of the market at the right time, this is one way of looking at it, you know, finding the closest, largest number and, you know, waiting for that number to be support. Then you'd be on the right side. Because if it was going to fail, it would be under here, and you can have your stop under the level. So the other little point here that should be pointed out is that with the 150 or 150 here, then we can look at 151, 152 and 153. That's all of group 1 there. So I could just bring that down a bit further. So if you really wanted to hone in there, getting a tested support on top of group 1, because that's basically what it is what you'd be doing at that point. And then the next level here is 55. So if you wanted to add to this, you would look for a classic trading levels pattern on the 155. Close enough anyway. And then you got 158. So when you get to 158, that will be the next level, and that's group 2. So you'll have group 2s in here, the other levels with that. 8's always a profit taking number, so you'll see the market depth building up there. So there'll be sellers sitting at that number, so you need to make a decision what you're going to do at that point, you know, because they really want to get out at 160, but they want to get out a bit earlier, so they're not thinking of number 9, 159 or 161, they're thinking of that number 8. So that's why I call it a profit taking number. Anyway, what about Goldman's? What are they up to? Okay, so with Goldman's here, we were just chilling. So this is a 15-minute chart. We're looking for 1, 2, and 3, and 4, and then 1, 2, 3, 4. That's the corrective move. So we're looking for that top there. We're not going to be rushed into that, because we're going to look for a pullback after that, and then we'll look to move in there. And the other point here is we've got 8 here as well. That 380. That's going to be an issue. So, but anyway, we'll wait. Like I said, with most of the markets, we're kind of waiting for that pullback, you know, because all of this will be wave 1 now and back for wave 2, and then going up for wave 3. So we want to build in this leg here. That will be, that's our mission. And the other thing too, that once we've got 5 waves here, then that's beautiful, because that tells us after 5 waves in the opposite direction of the trend, because the trend's been down, once we get 5 waves here, then we're going to get a correction, then we're going to get another 5 waves. So having that 5 waves there gives us an edge. And then if we get this corrective pattern and we get this right, and we can buy on the B wave top here, then that's another edge that we have, you know. And then we look at the price and we go, well, 380 is going to give us a problem, and 400 is going to give us a problem. So the 400 is going to see a classic trading levels pattern. Now, because we got 5 waves here, we know that we're going to eventually push on through that. So let's use it. Let's buy the dips as it, you know, because it's going to, you know, it's going to give us the normal things. It's going to give us, let's just get our drawing tool here. It's going to give us the arrival, the reaction, the first high above the level. It's going to give us some sort of pattern like this, and then it's going to like head on. So we could buy here, we could buy on this side, because normally you trade to here, get out, and then we get back in over here. Now, in some markets, when you're trading stocks, you know, some of these corrections across here could be 6 months, you know, or 3 months, or 2 months, or 1 month, or whatever it is. So that's capital tied up there. And As you learn the levels, though, you'll go, oh, well, I'll get out up here. And then you have to suffer that correction, you know. And you go, oh, you got to go through that emotion, and then you get a bit more, and then, you know, then you think, oh no, it's still going up, and then it comes back, and then you're stuck in here, you know. So it takes a bit of discipline to be able just to get out, you know, to sell into the trend, so to speak, at the right time. So yeah, it's just, but these things you have to go through it yourself. You have to experience it and build, you know, on your experience. Alrighty, thanks for tuning in. Much appreciated. Cheers.